Hi, everybody. Welcome to this chapter, chapter 12, on complex frauds and financial crime. So you might be asking yourself, what does that mean? Typically, when we read this chapter, we'll find that basically is talking about organized crime. So that's what we're talking about in this chapter. It's not typically what accountants or our typical accountants are going to be dealing with. So I don't want to spend too much time on it. So I'm going to go pretty quickly through the highlights of this chapter. So if you need a little bit more detail, make sure you go through and read and get some more of those nitty-gritty details. So I want to start off by talking about the difference between an accidental fraudster and a predator. So the accidental fraudster, when we talked about that fraud triangle, it's their first time typically, and it's someone who has that non-shareable problem, and they're committing fraud to answer this non-shareable problem. So that is our accidental fraudster. Now let's compare that with our predator. So the predator might start off as an accidental fraudster, but then they move into where they're actually seeking out organizations that they can immediately start some sort of fraudulent act as soon as they get hired. In your textbook, it talks about a man who it was his fourth offense, and he ends up killing his child and setting his house on fire, basically because he is this predator and shows little remorse for what he's doing. But basically they're seeking out organizations that they can commit fraud in with that sole intention of committing fraud. So when we're talking about these complex crimes, typically we're going to be talking more about these predators than the accidental fraudster. So one central element of our complex frauds and financial crimes is that we're going to have collusion. So multiple individuals, organizations, jurisdictions involved in the crime. So, one thing that we always harp on is that we have to have strong internal controls. Well, internal controls are not very effective at preventing or detecting detecting these collusion activities. So monitoring is typically something we would like to have to help us reveal if some controls are circumvented. Monitoring is not going to have much of an impact on collusive activities, illegal because they're going to be disguised. They're going to be structured in a way to disguise the nature of those real operations. So a lot of these complex crimes are going to be collusive. They're going to have multiple individuals or organizations across multiple jurisdictions, people working together to try and carry out these frauds. And it's going to be very difficult, if not impossible, for the organization to find out about them. Typically, we're going to have to mix some illegal activity with some legal activity. So we're going to see that mixture putting them in illegal activity into legal businesses. The example I like to use for this is Breaking Bad. So if you've seen that show, it's about a high school chemistry teacher who turns into a drug dealer because he can make the best crystal meth around. Well, as the show progresses, he gets into business with a guy who owns a bunch of fried chicken restaurants. And really, the fried chicken restaurant is just a front to help cover up the drug money. So that's this idea of the legitimate business is the fried chicken business, but the side business that they're doing is laundering money for the drug business. So the challenge for investigators is to be able to isolate the drug business from the fried chicken business, and split out what's legitimate and what's not legitimate. And the reason that we need to do that is because we want to dismantle these organizations when we find out about them. So we can seize assets as a means to punish the perpetrators who are involved in this and dismantle those organizations, make it more difficult for another person in the chain of command to be able to take over and start that operation. So the investigation needs to show that the perpetrators or the organizations involved received assets, what happened with those assets. And this is going to require that all records, their banking, public, business, personal, financial, non-financial, all of that has to be searched to identify assets available for seizure and to help separate illegal activities from those generated from a legitimate source. What else do I want to say about this? Okay, so criminal organizations can't declare bankruptcy because they are not a real active organization. So seizing those assets can have the effect of putting them out of business, at least in the short term, until they can generate money to get going again. So schemes and illegal acts associated with the complex crime. So again, it's going to be more likely to be those predators than our accidental fraudsters. Their motivation and intent is generally more nefarious and deliberate, and their mode of operation is going to be more sophisticated. The perpetrators of these complex frauds and financial crimes are going to collude with others. So some of these same things that we've already talked about, they're going to mix legitimate and illegitimate activities. When we think about organized crimes such as drug trafficking and terrorists and financing these things, you typically think of strong organizations and carefully planned operational activities. So these types of organizations are very sophisticated, tend to be very well disciplined, tend to make full use of technology. They use the portable or disposable cell phones and internet money transfers and cell phone money transfers, easy movement of money around the world. And these are things that just make it more challenging for those that are responsible for policing and stopping these activities. So what are these schemes that we're talking about? So organized crimes, so unlawful activities of highly organized, disciplined associations, thinking like the mob. So they're often going to be involved in some sort of professionally run organization. They're going to be opportunistic. They're going to be diversified. They're going to have political connections and support. They're going to have large capital investments. The annual impact of organized crime has profits of approximately $1 trillion. They'll manipulate and monopolize financial markets, infiltrate labor unions, align themselves with traditional businesses, again, having that connection between legitimate and illegitimate businesses. They'll buy public political support, so they'll bribe their local officials, bribe their local police officers to look the other way. So that's this idea of organized crime. So drug trafficking, so the trafficking of narcotics or for this legal sale in countries all over the world, that's what drug trafficking is. Countries can form partnerships to tackle illegal drug problems. Illegal drug trafficking costs the US about $70 billion a year. And the probability of detecting drugs has dropped considerably once they enter the US. So we would try to catch them early on. So we're trying to fight drug trafficking, understanding the storyline, who, what, where, when, why, and how, and the flow of money provides solid investigative approach for case development in drug trafficking. When it comes to terrorist financing, terrorist organizations need a lot of funds to operate. So our goal is to deny those terrorist groups access to the international banking system to help impair their ability to raise those funds. The primary sources of terrorist financing come from state sponsorships and also revenue generated from legitimate and illegitimate activities. So they can So if you think, oh, it's their government funding them, not always. Terrorists can utilize less restrictive overseas banks, and charities have been used to help fund terrorists. So that's the little bit I know about terrorist financing. And then finally, money laundering. So that's the process of making dirty money that's came from illegitimate source to appear clean as if it came from a clean source. So again, if you haven't seen Breaking Bad, you can watch Breaking Bad and learn all about drug money laundering. And basically it's to provide, they work to provide money laundering so that the government, to prove money laundering, the government must demonstrate that they have financial transactions was attempted or conducted. The defendant knew that the proceeds were derived from an unlawful act, property derived from a specified unlawful act. The defendant attempted to accomplish one of the following objectives. So either promote a specified unlawful act, conceal the nature, source, location, ownership, or control of the proceeds, attempt to avoid federal reporting requirements such as taxes, or attempt to evade taxes. So money laundering takes place in 3 stages. So first we have the placement, where you're placing money into a financial system. Layering, where you're hiding or disguising the source of the money so that we know, so we're hiding that things came from an illegal source. And then finally, integration, where you're using money without the risk of being associated with dirty money. So it's coming out clean. So that is money laundering. Last, I think, no, I got a couple more. So some legislative things that have been put into place to help combat crimes. We have RICO, which is Racketeering, Influence, and Corrupt Organizations Act. So this was put in place to address the organizations involved in making dirty money clean. So in those money laundering organizations, the goal was to allow investigators to go after businesses and other entities involved in organized crime. Essentially, RICO is making it illegal for any person who has received funds that were derived directly or indirectly from a pattern of racketeering to invest or acquire any other business that is involved in interstate or foreign commerce. They also are going to provide for the forfeiture of assets used in racketeering crimes and permit civil damages as well. So that is RICO. Then we have the U.S. Patriot Act, which is formerly known as United and Strengthening America. This act is going to be used to identify new types of money laundering crimes and also increase the penalties associated with them. It set out procedures for forfeiting or forfeiture, so taking of bulk cash that has been smuggled, and it also permits the confiscation of property of an individual or entity who participates in the planning of a terrorist attack. So that's the U.S. Patriot Act. Then we have the Bank Secrecy Act. This was passed to assist in the investigation of illegal acts associated with drug trafficking and tax evasion. This is going to attack the placement stage of that money laundering process. It's going to require that financial institutions maintain adequate records and that financial institutions report certain types of transactions to the federal government. Transactions involving suspicious people have to be reported on that suspicious activity report, and any movement of more than $10,000 into or out of the U.S. also has to be filed under this act. We also have mail and wire fraud. So mail fraud is a scheme to defraud someone by fraudulent pretenses, and such fraud takes place using the U.S. Postal Service. So the person needs only to cause the mail service to be used to facilitate the fraudulent act. So sending anything fraudulent in the mail is going to be considered mail fraud. And then wire fraud is the use of wire, radio, or television to communicate false or fraudulent pretenses. must be associated with interstate or foreign commerce for wire fraud statutes to apply. So if it's all taking place in one state, it wouldn't account under wire fraud. Then we also have the Foreign Corrupt Practices Act. This is a US-based law that prescribes how companies should act with regard to bribery and corruption. Organizations need to monitor their agents and intermediaries. Willful blindness does not prevent liability. And this act prevents or permits facilitating payments made to streamline or expedite a service to which the payer is legally entitled. And then the last one, we have the UK Bribery Act of 2010. This was introduced to update and enhance the UK law on bribery. Creates 4 offenses. First, offering or promising to giving an advantage. Second, requesting, agreeing to receive, or accepting an advantage. Third, bribery of a foreign public official. And fourth, failure by a commercial organization to prevent a bribe being paid to obtain or retain business or a business advantage. So those are the 4 different types of bribery offenses under this act, and it's going to apply to both UK companies and non-UK companies that are operating in the UK. And it's facilitating payments are legally made under this act. Any payment made under this act would then fall under that. Okay. So when we are moving money, so thinking about this idea of mass movement of money or money laundering, there are the 3 V's that are important. So volume, the amount of money that's moving, velocity, the speed, and the venue, who controls it, where does it exist, where is the actual place of that money. So those are the 3 V's that we are concerned with. And then our last slide here, moving money internationally. So in order to transact business internationally, most companies also need to issue forms of payment that in that normal check dispersing process through some domestic checking account. So how are we going to move money from a Colombian drug entity into the United States? So we might need to have some advance payment. So cash flow timing is advantageous for the provider of goods and services, but has the potential to put the buyer in a cash flow crunch. As a substitute for cash in advance, some providers of goods and services accept documentary letters of credit. This is a common form of international payment because both the buyer and seller are afforded some protection. The bank operating as the honest third-party broker, and then the bank essentially guarantees the provider of goods and services payment, assuming some sort of contractual performance as soon as the buyer confirms that the terms and conditions have been met. In advance of the transaction, the buyer specifies the documentation required in order for the seller to be paid. Such details may be the subject of negotiation between the buyer and the seller. And once the goods and services have been provided, the seller provides the required documentation to the bank, including the sign-off of third-party shippers and other agents of the transaction. Upon receipt of the documentation, funds are transferred from the buyer to the seller as agreed upon in the contract, and the documentation typically includes a bill of lading issued by the transporter, a certificate of inspection by the agent, certificate of manufacture by the seller. So all sorts of different documentation there. So documentary collection is what we would need. So this is that idea of that letter of credit. What else do I want to say? I don't really want to say anything else. All right. That's all I've got for us today. Check out our chapter 13 video, and I will see you next week.